All right, let's dive into Darco Water Technologies. Now, they're a big name in water and waste solutions, but their latest full year results for 2025, well, they're turning some heads. So today, we're going to break down exactly what happened, why it's a big deal, and what we should all be keeping an eye on. Let's get right into it.
Yeah, there's really no sugarcoating this one. 2025 was a challenging year for Darko, to put it mildly. And when you look at the headline numbers, they tell a pretty stark story. And this is the number that just jumps right off the page. A net loss of 5.86 million Singapore dollars. I mean, that's the bottom line, the final score, and a figure that big tells you there's a serious story unfolding behind the scenes. Exactly. A loss is one thing, but look at this comparison. Just the year before, in 2024, they were actually in the black with a $500,000 profit. So we're not just talking about a bad year, this is a massive, over $6 million swing in the wrong direction. So what's causing all this? Well, a huge piece of the puzzle is right at the top, revenue. It dropped over 13%, from almost 60 million down to just over 51 million. That's a serious chunk of change to lose. The big question is, where did that business go? To figure that out, you really have to slice the company in half. See, Darco basically has two main divisions, and their performance couldn't be more different. It's truly a tale of two segments. And here is that split, clear as day. Their big, splashy engineering projects, revenue just fell off a cliff, down over 18%. But then you look at their operation and maintenance services, or O&M for short. That part of the business actually grew by 3%. It's a small win, but it's a really important bright spot in all this. So what on earth happened with those big projects? According to Darco's own report, it was kind of a perfect storm. They had delays from other contractors, they just didn't win enough new work, and they got squeezed by what they call intense competition, especially down in Malaysia. And that intense competition, plus rise in costs, it hits you right where it hurts, profitability. Their gross profit margin, that's basically the profit they make on each sale before other expenses, got slashed, dropping from over 20% all the way down to just 12.3%. That is a massive squeeze. Okay, but a company's health isn't just about its profit and loss statement, right? If we dig a little deeper here, we actually start to see some pretty smart moves and some positive signs that show Darco is actively trying to pilot through this storm. This right here is fascinating. You see that big net loss of almost $6 million? But at the same time, the company actually generated over $1 million in cash from its core business. So you're probably asking, how is that even possible? Well, the answer is a little something called operating cash flow. The best way to think about it is it's not accounting profit, it's the actual cash that came in the door versus the cash that went out. For this to be positive, even with that big loss on paper, is a really strong signal that they're managing their day-to-day finances well. They call it proactive working capital management, which is just a fancy way of saying they're being smart with their cash. And you can see them making some other big moves too. They sold off assets in Malaysia, that's the market where they said competition was so tough, which helps streamline things. And at the exact same time, they moved to buy the rest of their subsidiary in Vietnam, basically doubling down and signaling that's where they see the future. Okay, so with all that in mind, where do they go from here? Let's take a look at the road ahead for 2026, because Darco is facing a real mix of serious headwinds and, some real opportunities too. And Darco is pretty upfront about the tough environment they're sailing into. They're keeping a close eye on slowing economic growth in the region, all the geopolitical stuff going on, inflation, and of course, that intense competition that already bit them this year. These are some major risks they can't control. But it's definitely not all doom and gloom. They see steady demand right here in their home base of Singapore, and they're really leaning into growing that reliable recurring O&M revenue. Plus, they've got these huge long-term projects, pneumatic waste conveyance systems, think giant automated vacuum cleaners for city waste, that should bring in money for years. And of course, they're going all in on Vietnam. Okay, so we've seen the rough numbers, the surprising cash flow, and the path forward. Let's try to boil this all down. If you're looking at this from an investor's perspective, what are the absolute key things you need to be watching? The entire story for Darco over the next couple of years really comes down to these four questions. 1, can that stable O&M business grow fast enough to make up for the lumpy, unpredictable projects? 2, can they keep generating positive cash flow? 3, is their big bet on Vietnam going to pay off? And finally, 4, can they get those profit margins healthy again when the market is this tough? And that really is the multi-million-dollar question, isn't it? The company is making some very clear, very deliberate strategic pivots. The question is, will it be enough? Is it the right move to navigate what is clearly a very challenging market? That's what everyone will be watching.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.